Good morning, traders. Happy Tuesday. It is August 13th, and we had some news this morning, right? We've got some retail earnings that are coming out, but the main news that we start the week off with is the PPI, the inflation data. We also have CPI tomorrow pre-market, and the inflation data comes out better than expected, causing a little pop here in these equity markets as we continue to print higher highs and higher lows overall. We had the U.S. core PPI, the month over month was expected at 0.2%. The prior was 0.4, and we came out with flat 0%. We had the U.S. core PPI year over year expected 2.6, prior 3.0, and it came out at 2.4%. And then the U.S. the U.S. PPI month over month 0.2 expected 0.1 came out. U.S. PPI year over year 2.3 expected 2.2 came out. So inflation dropping, good for the equity market. Tech is happy. Semis are happy. Markets get a little pop off that, and then tomorrow we're going to see what the CPI does. So all in all, right, the upside does continue with market buyers coming in at higher lows continuously over the past few sessions here. And we'll see how that shapes up, considering we're coming towards the top band of a very large distribution over here on the auction. But we're still sustaining bull side until we get there, and then we'll see what the buyers have in store. Are the buyers strong enough to break through that area and continue this gung-ho rally, or are we going to see a little pullback in these markets? Again, like yesterday, like I was saying, it's very hard to be bearish this market if we're above 53.40, especially above that 53.25, which is right very far away from prices right now. So there's a significant amount to drop to actually open up some of that bearish pressure. Now, in other news right here, we are going to look at some of the retail earnings, which are the next earnings on board. We have Walmart that's coming out very soon, right? So it's a good gauge for many investors and market people that have market positions to take a look at these retail earnings that are coming out to assess the U.S. economy overall. We have earnings from Home Depot that are kicking things off. With comparable sales shedding a spotlight on the current spending habits of the U.S. consumers. We also have Walmart that's going to report on Thursday. We can see that Home Depot didn't really get too much of a movement from this, right? We're gapping down a little, but nothing too crazy after a beat in earnings. We got Walmart, I believe is tomorrow, if I'm not mistaken, or Thursday, I should say. And on the same day that the retail sales data is going to be published for July. Nervousness has been present in the market since July's weak job reports that highlighted rising unemployment. It helped volatility spike last week, while stocks have since recovered from that major sell-off very well, I should add. The situation does remain slightly fragile, but fears could reignite if there's further hints to slowdown, especially since consumer spending accounts for more than 2/3 of the economy. But the figures also could provide reassurance if the numbers go the other way to continue this momentous rally that we've seen off these lows. So what we're seeing right now, the same situation will play out tomorrow. A hot consumer price index report could push stagflation fears back into the market. But after we saw the PPI data, right, there's a slight expectation that we could see, especially with the bidding that's been going on in this market intraday. Yesterday, a massive bid into the close. It's alluding to softer inflation prints that could help this continued rally just force its way back up and up and up. So if we see easing price pressures like we saw earlier today, it would calm investors' nerves and may provide more of a relief rally, right? So a report by the New York Fed yesterday also showed that the 3-year consumer outlook hitting a record low, which will be yet another factor in expectations about whether the Fed will embark on a rate cut cycle next month, which is pretty much priced in at this point. And as we look at this, right, investing group leader Lawrence Fuller had a quote on this. We may see some volatility in the days ahead as bears attempt to sway investor sentiment by wrangling over how each economic report is either inflationary or recessionary, but they are likely to fail in their attempts to breathe life into the narrative that has fallen flat for nearly 2 years. If you forecast a recession or the end of a bull market, you will eventually be right, as both are natural stages of the economic and market cycle. But if you're early a year or more, then you're not doing anyone any favors, including yourself. So I do agree with this, right? Realistically, we can't expect recession year after year, but until it comes, you don't necessarily know. So there are obviously hints at it, and I don't think that we're extremely close to one, especially the economic and political factors that are coming out this year. In terms of some of the other news, there's not really too much more. There's something out of McDonald's here. that we can take a look at. We'll see. There's Fed Bostic is speaking today at 1:15 p.m. Eastern Time. Equities are up. Oil has rallied super aggressively over the last few days, which has the potential to continue that momentum into the year, right? There are many, many cycle lows that are kind of coming into consolidation on oil that represents some more upside pressure. So McDonald's, right, to lure in price-sensitive consumers and compete with McDonald's, a $5 meal at KFC, which is ticker symbol YUM. We can take a look at it here. I don't know how that stock has been doing, but here's Yum Brands that own KFC as well. So the $5 value menu to include chicken nuggets and the famous bowls. The fast food chain will also offer free delivery on Thursdays for any order on the KFC app or website starting September 5th, coinciding with the start of the football season. Competitors like Wendy's, Burger King have also introduced their own value meal offerings after the success of the $5 meal at McDonald's, which it's said to have boosted foot traffic by luring consumers in from rival chains. Now, I'm not saying this is necessarily some outstanding great news that we care about, but it's something to fill in some time here. So, based on what's going on in terms of the activity and the movement that we do care about, in these markets here on the S&P 500, what I'm looking at is that continued upside momentum where we're inside a larger distribution to the upside that has the potential to continue to rally even today, right? As dip buyers are trying to hold higher lows in this market, there's a lot of volume and there's a lot of imbalance that is trying to create that higher low. If I'm looking at this, realistically, 54.15 on the S&P 500 futures is going to be a target to see how prices react there. But dip buyers are going to try to hold out that 53, like 82, 84 area. And I think one of those final chances around that 70.68 on the S&P. We start losing 53.60, right? Some of the sellers from the past few days are going to get a little more excited. But like I said before, I'm going to be more of a bear if we break through 53.38, specifically 53.25, which is a very long way to go. Prices are pulling back right now, so we'll see how this day transpires. But I think it's going to be a tough battle for these bears. We're getting into areas where they're going to have their chance, but the bullish pressure overall the last few days is going to take a lot of real selling to actually combust. So keep that in mind. Understand where your pivotal areas are and how you want to trade them, rather than just like saying, oh, it can't go any higher, it can't go any higher, let me just keep selling these rallies as it continues to catch a massive bid. Another thing to take a look at is the VIX, the volatility index, the gauge. It's been sinking lower as of recent. Last multiple sessions here, we've seen the VIX continuously drop. We're still not into that 17 area, which for me marks a region where the buy side on equities is going to get more aggressive. So we're still in limbo territory as price fragility happens to creep up after a significant rally to the upside over the last like 5 days. So I'll be watching that. I want to remain bullish until my areas are broken, and then I'll reassess. So let's open up our live room. I'll see you guys in there. Check out community.tradepro academy for our open Discord. And we'll do this again tomorrow. We'll see what CPI does, and we'll break that down. So thank you, everyone. Happy trading. Enjoy the day. Take it slow. And remember where your areas are in the criteria. Yeah, I just noticed my webcam froze. Thick bubble. Next time, tomorrow. So thank you all.